many ride apps in Kenya. In fact, people tend to use the most popular one, Uber, Bolt, and Lidl. However, there are other players who have managed to stay under the shadow of the aforementioned apps, but have run their businesses locally anyway. One of them is NopeaRide, which has been offering its services using electric cars. The company has said, though, that it will cease operations in Kenya. The business did not go as planned following the start of the pandemic in early 2022. COVID rules, for instance, are said to have been a 60% drop in daily kilometers driven by Nopea's electric vehicles. Microsoft has announced the launch of its global skilling program in Kenya with the goal of increasing access to digital and foundational skills. The Skills for Jobs Learning Pathways program has been introduced locally as a build-up to the success of Microsoft's Global Skills Initiative, which was launched in June 2020 and has since reached over 80 million people worldwide with digital skills. In Kenya, the Global Skills Program has impacted an estimated 189,000 people, with 4,471 Kenyans completing the learning paths through the initiative. Moove, a Nigerian-born mobility fintech, has secured $30 million despite a recent round of quiet staff layoffs. This raise is Moove's fourth round of funding in 2022, bringing the total amount the company has raised to $181 million. American multinational investment firm Franklin Templeton Investments arranged this to aid Moove's plan to build the largest electric vehicle ride-hailing fleet in the MENA region, and that's Middle East and North Africa. With the successful completion of this raise, which was a debut, Sukuk, Moove plans to tap into the wealth of Islamic investors who seem interested in environmentally and social responsible projects and could open up further avenues to finance Moove's ambitious expansion plans. Joining us to discuss further, CEO of Alpha African Advisory, Sanyade Okoli. Good morning to you. Thank you so much for joining us. Really good to have you. I also wanted to start with Nopea in Kenya. Is survival about financial backing? Because we understand, well, I'm sure you know what, they had a backer in Finland and something went awry.
So the Finnish majority shareholder went into insolvency in Finland. And as a result, the minority shareholder ended up having to file for insolvency for Nopea in Kenya. Obviously, your financial backers make the world of difference, but it need not necessarily mean that just because your parent company folds, you have to fold. Because, for example, I was asking myself, could there have been a management buyout? Management buyout? Yeah. Could that company have been sold? But the reality is a business like this is quite capital intensive. The last fundraise they did, they had mentioned that they needed 20 more vehicles to reach break even. So unless somebody's comfortable in not only acquiring the company, but making the necessary investment for them to get the kind of cash flow that makes sense, it becomes hard. And I think that they did struggle to raise the necessary financing, and they've had to file.
If you're moving from point A to point B and you're using a ride-hailing service, do you care whether it's an electric vehicle or not?
Reuters, in you asking me that question, I feel judged.
I just want to get the business model because, I like what they're doing.
I know I should care, and it's interesting because obviously we're talking about Moove. They just raised a whole lot of money for electrical vehicles. Right. Should it make a difference? Yes, because climate change is a concern, or should be a concern for us all. But in practice, for the average person on the street, it's like, what's your price point and how efficient and effective are you? Okay,
and it's unfortunate that they're closing shop. Does this deter the next electric vehicle startup, or does it embolden them to learn from their mistakes? How do you think that
If I had been working on an electric vehicle ride-hailing company, the fact that they're out, as you said, I would definitely learn. I would do my research to understand what went wrong. I'll make sure I try to recruit some of their key staff, because they will truly understand the market. They will understand the hurdles and the challenges and also the opportunity. But it won't put me off, because it means that one player, basically, essentially, the competitive landscape should be easier because they're out.
What do you think, and this is a follow-up to a prior question, what do you think about the sustainability of electric vehicles in Africa with the infrastructure challenges like power and so on?
I think if you, as with, to be honest, most businesses in certain parts of Africa, I shouldn't generalize, because some countries have more challenges with infrastructure and electricity than others.
Right.
But if we were to focus on countries that fall into that camp that struggle, as with so many other businesses and so many other sectors, you will have to invest in the necessary infrastructure. So you need to ensure that it makes sense, that despite that investment, the economics still make sense. And I think as time goes on, it will, because as you know, so many car manufacturers have plans in place to phase out the manufacturing of fossil fuel vehicles.
Right.
So there will come a time where we will be forced as a continent and certain nations to make that investment anyway.
Right, right. Okay, so like you mentioned Moove. Now, in our prior segment, or 2 segments with Chico and Bono, we're talking about Chipper Cash, which is a fintech company laying off stuff. Moove also, in fact, across the tech space, it's just been layoffs, but they still managed to raise this latest round. Now, as an advisor, you advise all these companies. Do you, advisors, investors, do you like, I don't know, this question sounds like it puts you in a bad light, but do you like to hear about layoffs? Does it make a company more lean and nimble and reduce costs?
It's not so much that I'd like to hear about layoffs,
Right.
but I certainly know that investors like to see efficiency.
Right.
So, what's your cost structure? What are your margins? Does this make sense? And I personally do not see the disconnect between raising the funds and having had to make the layoffs, because you've got to remember that a fundraising process takes ages anyway.
Right.
So it's not like they would have just started their discussions with these investors in the last few weeks. So that would have been in the pipeline. But at every point, businesses have to look at the economics of their operations and saying, am I optimizing? And as you have rightly pointed out, so many businesses have been laying off people because, when I look at what Moove have done in terms of how much money they have raised and how extensive their operations, because remember they started in 2020.
Yeah.
What comes to me is that they are going to need an exceptionally sound management team to make sure that, one, they digest this new investment effectively, but 2, they can really manage the breadth of operations that they have taken on.
Great stuff. I asked you about electric vehicles, which they're doing, but also they're into vehicle financing. How do you see the sustainability of that? I know South Africa, you can lease a vehicle for a year, 2 years, return it, and you can just put down the down payment and so on. For around the rest of the continent, same as the electric vehicle question, vehicle financing. You think that has runway across the continent?
Absolutely.
Yeah.
Consumer finance in general has to become more accessible.
Yeah.
Some would argue that on the one hand, and I'm not for 1 minute trying to justify corruption, but part of the pressure and the driver underpinning some of the corruption we see is the absence of consumer financing.
Right.
That people, where in the world do you need to pay 2 years rent in advance or 3 years rent in advance? People need to fund that.
Right.
If vehicle financing or other forms of consumer financing is not available, excuse me, then people are forced to have the full amount in place to acquire assets. That does put some pressure. So I don't think it's a nice to have. I think it's more a need to have. The question is having the right cost structure, because why it's so difficult is if you're asking me to pay interest rates of 20-25%, it makes it really difficult. So we need to be able, sources of funding. We need the financiers themselves to gain access to cheaper sources of financing so that they can develop and market attractive products.
Yeah, great stuff. We're out of time, but I'm saying it now on air. Next week, we got to talk about skill building, digital skills, and income inequality. I badly wanted to get your thoughts, but we're out of time. But next week, Friday, if you're in town, because you're a busy executive that travels, hopefully we'll discuss that with you. CEO of Alpha African Advisory, Sanyade Okoli, always a pleasure having you. Thanks so much for joining us.